part of our presentation is about the introduction of financial institution. The financial institution that we choose is Bank Audi. Bank Audi is a Lebanon-based universal bank and financial services company headquartered in Beirut. The bank was founded in 1830 and established in 1962 as a private joint stock company with limited liability. Moreover, members of the Audi family and the several quality investors were the bank's first stockholders. In addition, the Bank Audi is a leading Lebanese banking group with a universal banking profile. The bank offers a full range of products and services in commercial and corporate banking, retail and personal banking, as well as private banking such as capital market activities and factoring. The bank provides a wide variety of traditional banking products and services to its corporate and commercial clients. These products and services include granting working capital and other loan products which provide services such as trade finance, performance bond, guarantees, letters of credit and cash management, advising on international trade, providing correspondent banking and financial consulting services. Lastly, in terms of its branches, the bank has a network in Lebanon with 63 branches covering the Greater Beirut area and other strategic districts in Lebanon. Also, the bank has a network of 50 branches in the MENAT region outside of Lebanon through its foreign subsidiaries, including 48 branches in Turkey. The bank has 2 subsidiaries in Europe, 2 in the MENA area outside of Lebanon, and another one is in Turkey. The next part of our presentation is about the issues of financial risk. The main issue faced by Lebanon is the currency risk as it affects the exchange rate, inflation, public debt and interest rates. The Lebanese government defaulted on its debt payments in March 2020 and this can cause the local currency to lose 80% of its value. Also, the banks in the nation have frozen withdrawals due to a shortage of appropriate money to satisfy the requirements of the country's expanding population. Hence, the crisis has stopped capital outflows due to allegations that the political establishment transferred billions of dollars overseas. Moving on to the next issue is the exchange rate. Lebanon experienced a financial and economic crisis in October 2018. Due to a shortage of foreign currency, Lebanon's banks have suffered a financial crisis and this makes them unable to pay deposits in dollars. As a result, banks are implementing limitations on foreign currency deposit accounts and the limits have been increased to include Lebanese lira accounts. The third issue is Lebanon suffers from high public debt. This is due to the fact that interest payments on public debt take over half of the country's earnings, which can damage the national finances. Lebanon's public debt keeps increasing due to the budget deficits, high government infrastructure expenditure, and inadequate tax policies. The budget deficit raises interest rates on local currency and encourages investment in Lebanese treasury bills, which are the principal source of the national debt.
Now, I will be explaining about our case study objective. Before I'm going further, I would like to highlight that according to what we have read, Lebanon has been facing financial collapse since August 2019 and it is still ongoing until today. Financial stability is important because it facilitates the flow of funds between savers and borrowers, and hence making sure that financial resources are allocated efficiently to promote economic growth and development. The case study objectives are first, to conduct in-depth research on a specific case. Second, to identify the causes of the financial crisis. Third, to analyze the strategic method used. Fourth, to determine how the organization has changed its practice and adopted new solutions. And fifth, to determine the effectiveness of the implemented strategy.
Following the huge demonstration of the October 17, 2019 protests, Lebanese commercial bank, Bank Audi, unlawfully restricted depositors access to their own money in US dollar right after they reopened their operation for an unprecedented 2 weeks. This action was despite the fact that there was no official capital control. According to the Depositors Union, Lebanese Bank Audi has terminated more than 30 accounts belonging to the UK nationals or their close relative after a London court ordered it to transfer funds stuck in the crisis-hit banking sector to a British client. The ruling obligating Bank Audi and its peer SGBL to transfer $4 million on February 28 is the first UK ruling obligating Lebanese institution to transfer dollar out of the crippled financial system, perhaps encouraging similar claims. The closing of this account is a preventive and vindictive act by the banks, according to the Depositors Union lawyer, Dina Abu Zawar, who added that the banks wants to avoid British account users going to UK courts to get their money back from Lebanese banks. More than $100 billion is still trapped in the financial system that has been frozen since 2019. When the economy collapsed as a result of the decades of unsustainable government spending, corruption, and waste. Banks have mainly barred dollar withdrawals and transferred funds overseas in the absence of formal capital controls, triggering several legal challenges with mixed results. The bank added that the UK ruling will result in unfair treatment of depositors, with wealthy savers who are UK residents able to reclaim all of their funds at the expense of those who cannot file such lawsuits. These restrictions have been one of the key factors that shook the confidence of the Lebanese people in their own currency and pushed the value of the Lebanese pound below its official exchange rate. This dollar shortage was further worsened by the large number of pounds that the central bank printed from 2019 onwards. On February 15, 2021, Bank Audi management reported that the bank has sold foreign businesses to strengthen their finance, as it would enable Bank Audi to meet regulatory requirements, which are to raise 20% of their capital defenses by the end of February 2021. While putting the bank among viable Lebanese banks with adequate capital and liquidity levels. Last but not least, Lebanese Bank Audi stated that it disagreed with a statement submitted on behalf of the country's banking association that called a staff-level agreement (SLA) with the International Monetary Fund as unlawful. The SLA has promised $3 billion in financing over 4 years to help Lebanon recover from a financial collapse in which its currency has lost more than 90% of its value. Bank Audi stated in a statement that it was not made aware of or authorized the contents of the letter submitted to the IMF from an ABL consultant dated June 21st. In fact, they recognized that the only way of the Lebanese acute crisis is an INF program, which should be implemented as soon as possible to avoid additional irreversible value destruction.
First and foremost, the causes of currency crisis is due to the Lebanese government stop making debt payment in March 2020, which resulted in an 80% decline in the value of the local currency. Following the financial and political crisis in 2019 and also the bombing in Beirut, the local currency crashed. Other than that, due to the country's usage of different exchange rates, humanitarian aid organizations that are currently experiencing a currency issue. The Central Bank of Lebanon requires humanitarian organizations to use exchange rate that are much below what is typical in the market. To maximize the amount of money their client get, humanitarian relief organizations in the nation are only left with the option of negotiating with the relevant bank on the most advantageous conversion rates. Lastly, the stability of Lebanon is being threatened by the economic and financial crisis. According to the World Bank, the economic condition in Lebanon is one of the worst depression in recent times. There is insufficient liquidity in Lebanese banks. Banks are unable to return clients' deposit. Small depositors in Lebanon's banking industry have suffered to the greatest losses as a result of the country's bankruptcy. Identified as essential, the exchange rate is regarded as free floating, yet in practice it is stable. However, the Banque du Liban (BDL) has been intervening through financial operations to increase capital inflows and its holding of foreign currencies in order to be able to peg the currency's exchange rate at 1,507.5. And in contrast, Lebanon has been one of the most heavily dollarized nations since the early 1990s, demonstrating a lack of confidence in local institutions and its currency. Numerous studies have shown that this propensity for keeping cash and depositing for foreign currency instead of local currency causes a series of crises. By the end of 2019, the deposit dollarization ratio has reached a 12-year high of 76%, up from 70.6% in 2018. In Lebanon, there are various exchange rates. 1,500 is one of the official rates set by the central bank, while the rates transacted on the illicit market is 3,900 and the rate set by the bank is 3,900 or so. Due to the various currency rates, deposits taken out of the banks are subjected to costs. Since February 2020, withdrawals of dollars from deposit has been completely halted in Lebanon. The Lebanese government missed payments on debt, which has an impact in the exchange rate. In 2020, the average exchange rate declined by 129%. Exchange rate depreciation led to soaring inflation, which has a significant impact on people's ability to purchase goods and services in the nation. The country is now impoverished as a result of the economic crisis. A new dollar deposit law was overturned in Lebanon in June 2021 after it led to mild street disturbance there because people were no longer able to exchange their money at advantageous rates. A long-standing practice that gave depositors access to their dollars at a rate higher than the legal tender was outlawed by the nation's judicial system. The current exchange rate of the Lebanese pound to the US dollar is 1,515. The Lebanese pound has lost more than 90% of its worth. As can be seen in the graphic above, Lebanon is one of the most indebted countries in the world, making debt service a significant drain on household wealth. The only source the government could find to fund Lebanon's deficit was internal because no foreign body was willing to lend Lebanon money. The state finances are weakened since the interest rate payments account for over half of government revenue. The increase in public sector wages and interest rate in 2017 contributed to an increase in the public deficit. In addition, Riyad Salameh, a former Merrill Lynch banker who has been the head of the national bank Banque du Liban since 1993, developed financial engineering, a series of techniques that amounted to give banks generous profit for fresh money. According to the bankers, it was a strategy that it might have worked if changes has been rapidly implemented in its wake. However, it will not have worked if not enough has been done, as was the case. As dollar flows improve, foreign reserve increase, the rise in liability was less clear and is currently a source of debate. According to some estimates, the central bank's assets are more than offset by what it owes, suggesting that it may be holding significant losses. In the meantime, the price of servicing Lebanon's debt rose sharply to a third or higher of budgetary expenditure.
One of strategy was by reinforces financial positioning. Bank Audi decided to increase core equity. In January 2020, Bank Audi has started to accepting US dollar denominated cash contribution to capital from its common shareholder. In 20 February 2020, Bank Audi has successfully collected $210 million for capital increase in a cash contribution in the first phase of a sector-wide equity required by the Central Bank of Lebanon. Higher bank core capital contribution lead to financial stability because it provides a cushion for absorbing losses during a crisis or other bank distress. Bank Audi also has taken an action by negotiation to sell Bank Audi C with First Abu Dhabi Bank. According to Bank Audi, the proceeds of the sale of its Egyptian subsidiary, whose asset total $4.4 billion and equity stood at $427 million in Q3 2019, can help enhance Audi Group liquidity and financial resilience. It will help Bank Audi to use the proceeds of the sale for improving its capitalization, financial resilience, and represent as a strong vote of confidence in the effectiveness of the Bank Audi governance and business model across the regions. As a result, Bank Audi was able to assist the requirement of the Central Bank of Lebanon amounted 622 million as required 20% of capital and rising 635 million with 331 million of it is in fresh dollar. Bank Audi also take a step by strengthening the foreign currency liquidity as to reinforcing the bank financial standing while facing liquidity crisis. On 31 July 2020, Lebanese Bank ensuring a ratio of offshore liquidity free from any obligation, exceeding 3% of their total deposit in foreign currency. Due to this action taken, a number of initiatives implemented by the Bank Audi offshore liquidity ratio has risen at 6% as at the end of June 2020, compared to 0.33% as at 16 January 2021. By strengthening the foreign currency liquidity, it can keep a fixed rate value, remain liquid in the case of financial crisis, maintain competitively priced export and provide confidence for investors. Bank Audi took an action to merge the local business operation of its fully owned subsidiary, Audi Private Bank and Audi Investment Bank into business as one of their strategies since the liquidity crisis hit Lebanon in 2019. The purpose of this strategy was to enhance the future competitive positioning of Bank Audi with a significant elimination in duplication and lower operating expenses. This strategy has received positive feedback from Lebanon Central Bank due to this strategy can help the bank to raise capital by 20% by February. According to Bank Audi, a smaller and cleaner banking sector can help improve cost efficiency, effectiveness, and rising focus on digitalization. The strategy taken by Bank Audi was to continue with the leverage policy intended 2 years ago and emphasize on the application of an enhanced risk monitoring and management. Bank Audi has active loan delivery supported by a centralization and specialization remedial function to closely monitor loan quality. As a result, the loan credit function was primarily focused on the activity of a decentralization and specialization remedial function with a directive to fully allocate all operating surplus to provisions until the dissipation of the current surplus.
Lastly, for the last slide for recommendation, we would like to highlight a few recommendations for Lebanon's financial crisis. First of all, Lebanon needs to do the structural adjustment in public finance requires in-depth actions. This is important as it will help to restructure the country's economy, boost international competitiveness, and restore the country's balance of payment. The next recommendation that we would like to highlight is Lebanon's exchange rate management needs to be realistic. The degree of exchange rate flexibility may have an influence on the development of financial markets, especially markets for local currency debt instrument, and markets for hedging against exchange rate risk. Besides that, Lebanon needs to have risen in an adequate emergency fund or money reserve. This is because it will help to keep the value of currencies at a fixed rate, and it will also maintain the liquidity in case of an economic crisis. Last but not least, keep debt to a minimum to take pressure off the public deficit and foreign exchange reserve. The particular reasons for these circumstances is the amount and structure of public debt can have a massive effect on a central bank's management of foreign exchange reserve.